That's why silver took so long to move. Silver now is being bought, I believe, by retail investors or some institutions that now realized how cheap it was, but it's still cheap. Right? I think anything below 100 still is cheap. So $50 silver is still cheap. I mean, because $50 is what some people paid for silver in 1980. There's not that many things that you could buy that are at the same price they were in 1980. So silver is a bargain. And so even though the media is now focusing on gold and silver, I don't think that that's some kind of time to sell, cash out, everybody is buying. In fact, I think the gold story is going to die for a while until it's 5,000. And then once gold hits 5,000, they may start talking about it again.
Peter Schiff highlights the decline of trust in the US dollar and its fiscal credibility, which is a much more structural problem. Schiff contends that the spike in gold prices toward $4,000 per ounce exposes the reality that investors and central banks no longer have faith in the government's ability to manage its enormous debt without resorting to endless money printing, despite frequent assertions that the US economy is still robust and inflation is under control. Schiff argues that central banks and other large institutions are secretly amassing actual gold as a hedge against a collapsing currency system, rather than tiny retail investors seeking publicity. He cautions that the largest move in precious metals may still be in the future because the typical investor hasn't even joined the party yet. Schiff predicts that as the dollar continues to decline due to mounting budgetary pressure, the next stage of the bull market will begin. For individuals who take action before the masses wake up, gold might rise above $5,000 and silver above $100, creating what he refers to as a generational opportunity. Be sure to like, subscribe, and hit the notification bell for more insights into gold, silver, and precious metals investing.
But to me, I think it's very likely that that's going to happen. But getting back to what I was talking about in the media has finally been talking about gold. And the frustrating part about it is they have no idea why it's going up. And the funny part is how they try to attribute it to everything other than the actual problem, because they don't want to have to admit that gold at 4,000 is not a good sign, right? Because they want to pretend that everything is great, especially the Republicans, especially if you watch Fox or, watch Larry Kudlow's show, right? Because they think the economy is booming, nothing could be better, giving it all credit to Donald Trump, right? So there's nothing to worry about. Inflation is gone. We have the hottest economy in the world. The U.S. is the strongest economy in the world. But why is gold at 4,000? It's right. If all these good things are happening, why is gold flashing this warning sign? And so they're trying to dismiss what's happening by saying, well, it's not really a warning. I thought one of the funniest explanations that the Kudlow crew came up with was that it was Europeans that are buying because they're worried about their economies. They're worried about inflation. So they're the ones that are hedging, right? But of course, gold is going up in dollars too. It's not just going up in euros. We have an inflation problem. They just don't want to admit that. The United States has a credibility problem. The world no longer has confidence in our ability to pay our debts without it creating massive inflation. And Trump is one of the reasons that the world is losing confidence in us, because he signed on to the big, beautiful bill, which took the Biden deficits and made them worse. And he's the one that is beating the Fed up about cutting interest rates, slashing interest rates, firing FOMC members, sticking his own people in there, taking over the Fed. This is challenging the idea that the Fed is independent. And this is scaring our creditors. And, the media is also trying to pretend. I heard some people talking about how, investors have been driving this, retail investors. No, they're not. I know for a fact this has got nothing to do with retail investors. The retail business has been slow. It's picked up a little bit over the last few weeks, but it's still slow. And it's not just at Schiff Gold. The retail public is just getting in on this trade. Investors are finally being told by their Main Street, Wall Street firms to include gold in their portfolios. They haven't been responsible for the run-up. So gold has gone from 2,000 to 4,000 with very little private investor participation. It's all been driven by global central banks. And global central banks aren't anywhere near finished buying. They are ongoing buyers. They have so many dollars to divest, and they've got to buy gold. So now the investing public is just joining. So the upward pressure on gold is going to intensify. But on silver, because the central banks were never even part of the silver story, that's why silver took so long to move. Silver now is being bought, I believe, by retail investors or some institutions that now realized how cheap it was. But it's still cheap, right? I think anything below 100 still is cheap. So $50 silver is still cheap. I mean, because $50 is what some people paid for silver in 1980. There's not that many things that you could buy that are at the same price they were in 1980. So silver is a bargain. And so even though the media is now focusing on gold and silver, I don't think that that's some kind of time to sell, cash out, everybody is buying. In fact, I think the gold story is going to die for a while until it's 5,000. And then once gold hits 5,000, they may start talking about it again. But it'll probably like drift away from the headlines, and the media will just go back to covering other things. In particular, Bitcoin. But one of the other things that really bothers me about the coverage, every time I saw somebody on financial news mention the price of gold, talk about gold, they also interjected Bitcoin. Like the two are the same. You can't talk about gold without talking about Bitcoin as if the two have anything in common. They have nothing in common. But the Bitcoin promoters want people to believe that Bitcoin is digital gold. That's the whole story that they're trying to sell, right? That's the meme, right? It's all BS, but the media, the financial media has bought into that hook, line, and sinker, so they keep talking about Bitcoin and gold as if they're the same thing. And it doesn't even occur to them that they don't trade at all with any correlation. And that's why you're seeing Bitcoin tanking today on a day that gold and silver are hitting record highs and closing at record highs. Bitcoin is going in the other direction. If Bitcoin was digital gold, it would be rising with gold. In fact, it's supposed to be rising more than gold. It's supposed to be gold on steroids, gold 2.0. Instead, it's not, right? Bitcoin is going down just like the NASDAQ. Now, also, oil was down quite a bit today. And it actually closed below $59 a barrel, which is also, I think, a reflection of the acceleration in the trade war and also some, peace negotiations going on that may have taken a risk premium out of the oil market. I think oil is ridiculously cheap. I think it's going to reverse. But in the meantime, these low oil prices are even lower in terms of gold. This is fantastic news for these gold mining stocks. So I do think that when the price of gold rises sharply next week, if it rises sharply, there's a strong likelihood that that's going to happen, I think a lot of the people who sold their gold stocks and silver stocks are going to rush to buy them back. Problem is, there's not going to be a lot of sellers, and the prices can really explode to catch up to the move in the metal that has already taken place. The U.S. dollar also fell, had a pretty good decline, I think 70 basis points in the dollar index today, but it still managed to close positive on the week, which is interesting because the entire time that gold and silver were rallying strong.
According to Peter Schiff, the market's movements this week demonstrated a widening gap between speculation and actual value. A historic milestone was reached by silver as it surged above $51, indicating both tightening global supply and robust physical demand. However, a number of traders panicked and unloaded mining stocks when prices momentarily declined, which contributed to steep drops. Schiff claimed that this was about emotion-driven trading rather than a shift in the fundamentals. In actuality, three fundamental factors continue to boost both gold and silver: growing industrial demand, enduring concerns about inflation, and waning confidence in paper-based financial assets. Schiff claims that this short-term volatility is only a small portion of a larger worldwide trend toward assets with genuine long-term worth. He also emphasized how markets were rocked by former President Trump's abrupt move to increase tariffs on Chinese goods. Bitcoin once again demonstrated that it acts more like a speculative asset than a real store of value. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
So there was a lot of people that sold the new high. Now, there was a lot of concern the prior day that silver would not get above 50 because the silver stocks actually were weak on Wednesday because I think traders were expecting a decline. And then when we got the huge gap up on Thursday, all those silver and gold stocks gapped way up. But then we got the sell-off from the higher level, and gold and silver stocks had one of their worst days of the year, maybe of the bull market. Silver stocks in particular, on a day that silver traded above 51 for the first time, you had a lot of silver stocks down, 5 to 8%. So they got clobbered. And again, that just shows you how nervous investors are and how quickly they run for the exits on any sign that, oh no, maybe there's a top, maybe there's going to be a correction. So far, nothing indicates to me that that is the case, especially considering the fact that silver recovered and closed really, I think, above $50 on the week. This is the highest daily close ever for silver. It's the highest weekly close ever for silver. I think the same for gold. This is the highest gold has ever closed a week. In fact, it's never closed above 4,000. And, now it's closed a week above 4,000, not just the day. And the gold stocks were actually down a bit, most of them. The GDX was down about 2.5% on the week, although the GDXJ managed to eke out a small gain on the week. But all of this was the result of the big drop that we had on Thursday. Now, you would have thought that maybe the gold and silver stocks would have recovered some of that drop today, but I think the overall carnage in the stock market prevented that from happening. The Dow had one of its worst days of the year, down about 880 points or so, 878 points. That was almost a 2% decline on the day. The Dow down 2.5% now on the week. The S&P, though, was down 2.7% today. Russell 2000 down 3%. Big down. The NASDAQ was down about 3.5% on the day, 2.5% on the week. In fact, the NASDAQ hit a new all-time record high today on the same day that it was down 3.5%. That is an outside reversal day. The NASDAQ took out yesterday's high and then not only took out yesterday's low, but closed below yesterday's low. And in fact, it did the same thing on a weekly chart. The NASDAQ took out the high from the prior week and then closed below the low from the prior week. So that is a bad sign for the NASDAQ that a bigger decline is coming. The catalyst for this decline was Trump getting tough on China. He was going to impose some serious tariffs on China in addition to the tariffs we already have. I guess he was preparing to get medieval on China, but we didn't even know the extent until after the close. And probably, I don't know, about a half hour or so after the U.S. stock market closed, Trump revealed that the new tariffs on China are another 100% in excess of the tariffs that are already in effect. There's now another 100% on top of that. And in addition, there's going to be export controls on what the U.S. exports to China, most likely, in computer-related stuff like NVIDIA, stuff and all that we don't want the Chinese to have, those GPUs. So as a result, we got additional sell-off in the stock market after the close. But the biggest decline came in Bitcoin, which was already down. I mean, Bitcoin was down pretty big when the U.S. stock market closed. In fact, Bitcoin was down 5% on the week. Now, in contrast to gold being up 3% and silver being up 4.4% on the week. So again, this should put another nail in the theory that Bitcoin is digital gold. I mean, it's not even digital silver. It's got nothing to do with a precious metal. Bitcoin did not rally today. Gold and silver went up. Bitcoin went down. It went down just like the NASDAQ, only it went down more than the NASDAQ. So it is a risk asset. It is not a safe haven asset. It has got nothing to do with gold.
According to Peter Schiff, this week's markets demonstrated how erratic and emotional investors have become. Many traders were skeptical that silver would rise beyond $50 an ounce at the beginning of the week. Stocks in the silver mining industry were poor and many were wary. However, silver took traders entirely off guard as it jumped beyond $51, its highest daily and weekly close in history. One of the worst sell-offs of the year occurred in gold and silver mining equities as a result of investors panicking at the first hint of a downturn rather than celebrating the breakout. Schiff claimed that this response demonstrates how tense and short-sighted the market has become, with investors selling even when the fundamentals are still solid because they are so terrified of corrections. Schiff said that nothing in the data points to a genuine gold or silver peak, notwithstanding the volatility. Due to worries about inflation, pressure from the world's debt, and waning trust in fiat money, both metals are nevertheless experiencing strong uptrends. For the first time ever, gold ended the week above $4,000, and silver remained close to all-time highs at around $50. Schiff underlined that while investors look for protection from the volatility of paper markets, these record weekly closing validate a historic move toward actual assets. He also talked about the wider stock market turbulence brought on by Trump's abrupt declaration that tariffs on Chinese goods will be raised by 100%. The Dow Jones dropped almost 900 points as a result of this dramatic policy shock, while the Nasdaq sank over 3% after reaching a new all-time high earlier in the day. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you're always up to date. Thanks for watching.